Hi Masters Advanced Accounting. We're about to go over an intercompany or interentity sales problem. So what's happening is there is going to either be a sale between the parent and the sub, or so the parent is selling to the sub, or the sub is selling to the parent. Until those products are sold to outsiders, the parent or sub have to eliminate 100% of the sale, okay? Because otherwise they would be selling to each other and double counting. So let's look at the particular problem. Here's the problem, right here. Parkette Incorporated acquired a 60% interest in Skybox Company several years ago. During 2020, Skybox sold inventory costing $160,000 to Parkette for $200,000. I stop. It's very important. You want to see who is selling to who. Is the parent selling to the sub, or is the sub selling to the parent? In this case, the sub is selling to the parent. Okay, so during 2020, Skybox sold inventory costing $160,000 to Parkette for $200,000. A total of 18% of this inventory was not sold to outsiders. This particular problem, they already give you the gross profit rate. So they're not going to make you figure it out. Others, they will. Next thing I want you to get, even though they only own 60% of this subsidiary, you will eliminate it for 100%. Okay, so there's no, you will always eliminate at 100%. Okay, so we're gonna break this out. So let me go over to the board. All right, so what I'm gonna first do is break out the gross profit. So in 2020, the sales and the cost, so the sales was $200,000. The COGS were $160,000. And that equals $40,000. And they tell you that what's remaining at year end is 18%. So I'm going to take this, I'm going to multiply it by 18%, and that will give me $7,200. So at the end of 2020, my gross profit still left in inventory is $7,200. Next, I'm going to figure out 2021. So 2021, the sales were $350. The cost of goods sold were $297,500. So your gross profit is $52,500. I look in the problem. What percentage are they saying? So they're saying 30% of this inventory was not sold to outsiders. I subtract it. Okay. So this particular problem, it didn't ask us for information for 2020, but we need that information because our ending inventory in 2020 will be our beginning inventory in 2021. Okay, so remember that. Your ending inventory in the prior year is your beginning inventory in the next year. Okay, so what it's asking for is, what is the consolidated cost of goods sold? It's only asking for cost of goods sold in this particular question. It's It's not asking for sales. It's not asking for net income. It's only asking for cost of goods sold. So it gives you the parent's consolidated net cost of goods sold, which is $607,500. And then it gives you the sub's beginning cost of goods sold, which is $450,000. Now, there's going to be a few items that of course will affect it. First thing is the sale only for 2021. Remember, this question is only asking for 2021. So the sale between the parent, the sub and the parent was $350,000. We will eliminate that at 100%. So we're going to remove the sale. And just so you know, the journal entry would be debit sales, credit cost of goods sold. If you're crediting cost of goods sold, you're subtracting from that, right? So that would be $350,000. Show that in parentheses. Okay, next, we're now going to recognize the 2020 this gross profit. Why? Because now it's considered sold to outsiders. That was your beginning inventory in the last year. Well, it's sold in the last year. So in the next year, you're going to recognize that 2020, all right? So your gross profit, what it's going to do is it will decrease. It's not asking for net income in this problem. It's going to decrease your cost of goods sold. So we're going to show that in parentheses. We're going to defer our 2021 gross profit, which was $15,750, and that's going to increase my cost of goods sold. So I will show that positive. Total it all the way down. Here's the parent plus the sub, minus this, minus, add that, and you get $716,050. Okay, so some of these questions are only asking for a certain piece. So they're asking for consolidated cost of goods sold. But remember this, your ending inventory will always subtract from your cost of goods sold. Your beginning inventory, you will always add in to your cost of goods sold. Okay, because you can't recognize this gross profit until it's sold to outsiders. And you have $716,050. So that is your answer to that particular problem. They'll all be different. I'll do separate videos. See you soon.